Hi, today let's talk about profit and loss accounts. Welcome back to Accounting for Creatives. Profit and loss are kind of connected to the equity part of your balance sheet. So let's focus into equity first. Equity can be affected by several means. It can be affected by bringing new assets into your business from your private properties. We call this private deposits. So you're kind of enlarging the assets of your company. You can do it the other way around too. You can take assets from your company and bring it to your private surrounding, and this is what we call private withdrawal. So you have private deposits, enlarging the assets of your company, and private withdrawal to make it smaller. These two are important because when you do your income tax form, you have to enter these numbers. So you really have to make sure that you keep them well mentioned in your bookkeeping. Let's focus a little bit into these two. The private deposits, we can have an example like you bring in a computer from your private possessions into your company. So when you bring it in, after that it's company property, it's assets for your company. But your debts haven't changed. So your assets increasing and the debts remain the same, meaning that the equity will be increased too, as equity is assets minus debts. Private withdrawals, on the other hand, is the opposite. You kind of, as an example, you book 1,000 euros from your company bank account to your private bank account. This means that your assets will decrease because your bank account is getting less. Your debts, of course, don't change, so your equity also decreases. So moving money from your private bank to your from your business bank to your private bank will reduce your equity. And this is something you probably do every month because you need money to live from. You make the money with your company, and every month you transfer the sum of this money to your private account. We call this private withdrawal. And private deposits and private withdrawals are important for your tax income declaration. But those two do not influence your profits. It's not like your business having a profit if you put some private money in it, or if it has loss if you pull it out. It has no influence on your profit. Besides being affected by private withdrawals and deposits, equity is also affected by revenue. If you send an invoice for work that you have done, then of course you make a profit, and this profit will increase your equity. The same thing if you make costs, if you buy something for your company, like it's not an investment but really costs, then your equity will decrease. Equity is finally influenced by these four parts: private deposits, private withdrawal, and revenue and costs. And these last two, they will decide how much profit you will have in the end of the year and how much income tax you will need to pay. So let's focus on this profit and loss part. And here we have an example of a simple profit and loss account report. It says that you have revenue about 35,000 euros and you have costs for 11,000 euros. Subtract them and you have a profit of 24,000 euros. And this is, if this is a freelancing bookkeeping, this will be your gross income where you have to pay taxes over. Very simple profit and loss account. Of course, if you're not doing a very good job, then your cost might be higher than your revenue, and then you don't have profit, but you have a loss, a negative profit. But we assume that you're doing well and you don't get into this situation. These are also important numbers because you really have to fill this into your income tax form at the end of the year. So that's why we focus on this, to make sure it's well in your bookkeeping. So your profit and loss accounts are considered to be auxiliary accounts for your equity. So your equity is on the balance and it's divided in a lot of subcategories which kind of explaining what happens with your equity during a certain period of time. On one hand we have the costs, and that can be divided in like cost of sales, travel expenses, housing costs, etc. Most of the time this is quite a long list. On the other hand you have revenue, and most of the time it's just one, like revenue, like the invoices you send. And maybe you want to divide it into hours and travel expenses that you invoiced your customers with. But most of the time it's a very small amount of numbers. Let's have a look at an example of a profit and loss account, and it can look like this. We have a turnover for 80,000 euros. This is the amount of money we invoiced this year. And then we have a whole list of costs, company costs. We can have sales costs, 30,500, travel costs, 2,250, service fees, 2,000, and some miscellaneous costs of 4,750. If we add these all together, we have a total cost of 22,500. And this needs to be subtracted from the sales amount. So if we do this, we end up with a profit of 57,500. This is in the end the gross income of the entrepreneur, and this is the amount he has to fill in his tax declaration, income tax declaration, and he has to pay income tax over this amount. So that's why it's important to keep these numbers separate. Then just for your information, some synonyms as we use in Dutch for these profit and loss accounts. We call it resultatenrekening. You will see it sometimes. The tax authorities are talking about winst- en verliesrekening, which would be a literary translation of profit and loss. Sometimes you see the name of exploitatierekening. And een staat van baten en lasten, which is more used in like non-profit organization. And the terms profit and loss also are used as baten en lasten. Baten means profit, lasten means loss. Then we decided in our bookkeeping cyclus, in our way of working, in our workflow, that we do not change the equity during a period of booking. So there's an opening balance with an amount of equity, and we don't touch it during the period that we are working. We only charge the auxiliary accounts, so the accounts for profit and accounts for loss. We also kind of keep track of the private deposits and the private withdrawals. So in the end of the period, maybe a month, maybe a quarter, or even just a whole year, then we're going to update the equity with all the changes that were made. This is just a way of working in all the bookkeeping programs and in the bookkeeping business. And to do so, we use a ledger. Ledger is really made up a long time ago, even before computer time, to register, to note all the changes in the balance separately from the balance itself. So each asset, each debt, each equity gets a number within this ledger, and it's a category where it belongs to. So it's easy to find it. Especially now in computer times, of course, it needs an ID to be referred to. The heading of these ledgers are kind of consistent, and these are the four most used in small bookkeeping, like freelance bookkeeping. The 0 is for long-term items. It means assets and liabilities at the same time. So your fixed assets and your long-term debts. And if it starts with 1, it's a short item. terms, short-term items, so you think about accounts payable, accounts receivable, etc. And the 4 and the 8 are for costs and revenue, which kind of are the auxiliary accounts for equity. Well, if you look at your computer program, they will have a table with all these ledger accounts, which combines all these balance posts and auxiliary accounts for equity, and it looks like this. The blue lines on the balance accounts are these from assets, and the red ones are from the liabilities, as you can see. On the other side, we have these auxiliary accounts. We have the red ones are like costs, they decrease equity, and the green ones are revenue, and they kind of increases the equity. And this table you will use daily when you do your bookings, when you do your invoices and other things that are happening in your bookkeeping, and you will have to put some amount of euros on one of these accounts. We'll get to that later. Summarize, especially for profit and loss accounts, is like auxiliary accounts for the equity in the balance. We don't change the equity during the booking period. We do it at the end with all the changes that were made in the profit and loss account. Now we go to part 7, which will talk about logs and journals to kind of do more sophisticated bookkeeping. See you there.